day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, and we're now tax day, the 15th of April, 2019, and also a bit of a disaster day if you've been watching the fire going on in Paris and Notre Dame. I had the privilege to be there once, and what a phenomenal cathedral it was, or I hope is, but boy, I can just tell you, in the Board of Trade, people huddled around TVs watching this tragedy as it unfolds. So during the day, we didn't see much in the way of currency movement, and believe me, we didn't see very much in the way of movement in a lot of the ag markets. I don't know if everything took away from that or what's going on. There is talk that the Trump administration is trying to move tariffs away from agriculture onto something else. I don't know what that something else is, because it does appear that as they're getting through these trade deals, they're going to keep some tariffs in place on Chinese deals. That's at least the scuttlebutt that's going around. But the administration, the Trump administration, wants to free up agriculture and put it on something else. I wish I knew more than that. I don't. I can tell you on the weekly area chart of closes, we're still trading underneath the 18-week moving average of closes, which keeps the bias down. If you take a look at the daily bar chart, it's just one of these. Wave upon wave with a higher high and a lower low, a market that is not trending. Now, to make a trend, if you were to break through this current low of 893 3/4, you would then have, without taking out this last high in the 904, lower highs, lower lows. Could you turn the trend up with this pattern? No. Even if you took out 904, you got the lower low. So that's always important. What else do you see? Notice how the market keeps fighting at the 18-day average of closes. Literally, since back here, we have hit it almost every day in the month of April. So it's pretty much a market that hasn't gone anywhere. If you take a look at the Bollinger Bands, the two lines here, think of it as resistance and support, and the market just staying away from both, just hanging at the 18-day average of closes. And even momentum just going sideways. So for me, at least, this is a market that doesn't warrant an awful lot of attention until it starts doing something. The meal market came alive in the sense that it made a higher high than the recent highs over 311, and the market had a good close right at that price. But you still have the lower low, higher high. Resistance would be the 100-day average. Momentum picked up and the bias is up. Problem is you can't get that pattern of higher highs, higher lows just yet. In the soybean oil, they flip-flopped the crush spread. So oil became the market that came under the pressure. The 18-day average of closes is 28.86. We finished under that with a 28.81 close, and at the same time, you made a lower low than 28.81 by hitting today 28.76. So in terms of a trend, it is down. Lower highs, lower lows, bias down, momentum down. I would expect to see professional selling against that 18-day average, and then the trend gets stopped out of if you get back over 29.13. If that doesn't get hit, the possibility still exists then of the lower Bollinger Band coming into play at 28.42. In the corn market, you negated the downtrend, but have not begun an uptrend. You have the process of higher lows and higher highs. So in terms of the swing line, that's up. It's countered, though, because you're still under the 18-day average, which means the bias is down. You got them fighting each other, so you have nothing, and you have a market that is oversold trying to work itself out of it. You've got to get these numbers over 30 to get out of them. In the wheat market, you're fighting at the 18-day average of closes, but more important, do you notice how sideways these black bands are right through here now? That's very indicative of a market looking to eventually break out of them. Now, for the near term, I'm going to say lower highs, lower lows, trend down. Bias down because you closed under the 18-day average, and momentum down. So I think the bears have control of the market unless and until you take out 465 1/4. If you were to take out 465 1/4 and not 455 1/2 first, you could easily end up with higher lows, higher highs. Over the 18-day average, the question is, would momentum turn up? the other side of this is this. If you're bearish, you can see where the pros want to defend the position, and that'd be around that 464 3/4 area. In the sugar market, we have a pattern of higher lows and lower highs. You get into a downtrend if the market cracks through 1260. That would give you lower highs, lower lows under the 18-day average. Given that the market is overbought, turns it down. So what do the bulls have to do? They have to stop that from occurring. The market is caught right now between a fight at the 100-day average in green and the 18-day. It has not been able to get up to the upper Bollinger Band. So if other people are seeing what I am, it might be that they're going to try to push through that. I'm saying what they could try, and maybe they can get down to the lower band. Even if they try to push the market higher from here, and they could, Bollinger top awaits them at 1284. Who's got control right here? Well, that's the interesting part. I think it's still nobody. Lower high, higher low, I'll call it neutral. In the coffee market, we're getting the bounce just the way that we have each prior time of hitting that lower Bollinger Band. To see the 18-day average come back into play would not be a surprise, as that's been sort of the pattern the market has done. But remember, the trend is down. The bias is down. You've got the lower highs, lower lows. You've hit a downside target and you've got oversold. Even if this market soared through 94.85, the current pattern would be one of a lower low and a higher high. And so far, you haven't been able to get to an upper Bollinger Band since February of this year. In the cocoa market, I'd be watching when the market reopens tonight if the red line closes underneath 80 or opens under 80 is the right grammar. And the reason that I'm interested in that is if you take a look, you settled near the lows of the day, momentum is losing steam. If you open steady to lower, the way the math works, it'll be working against it. What I'm saying is I think the pros are going to look at that tonight. Right now, the market has a pattern of higher lows and higher highs. Take out 2390 and drop that number down, and you might put the market and the 18-day average in line to hit each other. In the cotton market, let's come back to Friday's action. You had Friday, we've already had a lower low and a higher high. So right here, we didn't know what we had. The key is if you take out 76.06 here, wait, let me just give you the right number there. 76.86, bad eyesight, it looked like that to me. Then you put in the possibility of getting down to the 100-day average and the lower Bollinger Band. The key is that on Friday, the market settled at 78.11, still over the 18-day average. So you've got one of these funny patterns on the market without a trend, so to speak. Today, it set itself down right into all that support, and now it's in the downtrend. Lower highs, lower lows. It's hit some important targets, but I would expect to see the pros waiting to sell the market on rallies. You're nowhere near oversold, and you've established a downtrend. In the cattle market, you're still fighting a battle to stay upward. You've got higher lows, higher highs. You're over the 18-day average. That's bullish. Bias up because you're over the 18-day average, momentum up. I'd be looking for support in the 120.65 area right here, and I don't think you'd want to see 120.05 violated. If you did, you'd certainly step out of the uptrend. You could even start a downtrend, starting to target the 11800 area, the combination of the lower Bollinger Band and the 100-day average of closes. In the feeder cattle, still an uptrend. Higher lows. Today's high at 151.15 took out 151.10. So you've got the higher high, higher low. I'll call for support at the 18-day average. You break the uptrend if you take out the 148, and that exact low is 148.82.5. And if the market can get higher, well, you've still got into play the upper Bollinger Band. Keep in the back of your mind, though, you're into overbought territory. Any reading over 70 is overbought, in my opinion. In the hog market, we had another meeting this morning in the office about this, and we keep feeling that China's just going to be a massive buyer of pork, not only from the U.S., but in other parts. They have to. They're losing too much. From March over March, they said they lost nearly 19% of their hog population. Those numbers came in today. I've been writing about how much they've been buying. The problem is the futures are a hard way to play it. One of the ways that we're telling traders is look at options, talk to our brokers, but that's where we think you go. You go much further back and you pay the premium and you say, if this market's going to run, what's a realistic number? And it takes an awful long time to build up a herd that, number one, is still being culled because it's not under control, and pork's a staple in China. So very important to understand just what's going on there. Now, when you get quiet markets like we're having in some of them today, one of the things that I like to do is start looking at what's called a pivot point. And I've put together a 3-part series on pivot points. And pivot points are very, very popular because traders will look at them during the day for support and resistance points in the market. And they're intraday points. Do not use them. Please don't use them for long-term trading. That's not what they're about. They're a center line with 2 levels of resistance, a center line with 2 levels of support. And what I teach is you tie those together with momentum from the slow stochastic intraday, and you're using it as an in and out tool more than anything else. Now, do I look at pivot points and see if they tie together with a Bollinger Band on my daily charts or other resistance or support areas? You better count on it. I do. So if you'd like to learn my technique of using it, it's really simple. Go to our website, sign up for pivot points. We'll send you the 3-part series by an email link, and away you go. You can always call my staff at 866-973-2077. They will help you out. I'm Ira Epstein. Have a great day.